Welcome to The Patient Physician. My name is Paul Smith, and I'm joined today by my co-host, Chris Fullbright.
Good afternoon, Paul. How are you, buddy?
I'm good, sir. How about yourself?
I'm excited for this one. This is going to be a great podcast for our listeners.
Well, that's putting a lot of pressure on Derek already.
He thrives under pressure. There's no issue with that. He will perform.
I hope so. We're going to find out. We can keep it or we can just burn it.
We'll put him to the test. That's right. That's right.
Well, today we're talking to Derek True. He is the brand and operations manager for the DI Center and pretty much knows everything. That's how I've come to know him. We call him for just about every question we can think of, and he's either got the answer or is able to find it. And so that's why we're happy to have him on today. He is part of the DI Center, which is a brokerage general agency in Allen, Texas, that makes asset protection and income protection easier for producers and advisors nationwide. Now, Derek oversees brokerage marketing and underwriting processes with a knack for the competitive landscape. He has presented to audiences throughout the country on disability insurance, operational excellence, and sales. So we thought that he would be a great guest to come in and tackle some of the disability insurance questions that we hear often, Chris. And so we thought we'd field some of those with him, and our audience, being physicians, always have a lot of questions. This is a very highly technical area. So who better than to have Derek on with us? But Derek has also been an active member of the National Association of Insurance and Financial Advisors, AKA we just like to say NAFA because it's a lot easier. And since joining the DI Center in 2011 and graduating from Texas Tech University, he is also the current NAFA Dallas president-elect, which doesn't shock me. He just continues to pursue this excellence we're talking about. And
it's all his spare time because he has a bunch of spare time. He just keeps stepping up.
No kids, no problems running around. Right. He's just constantly, we'll get to that as well. But he's also a member of the Texas Leaders Roundtable and the International DI Society. Derek is also a family man. I was kidding about him not having kids. We know he's got young kids running around keeping him busy. And he's active in the community, leads within his church, and enjoys travel and sports. So with that, Derek True, welcome to the show.
Thank you, Paul. Thank you, Chris. Excited to be on and try to maybe shed a little light or give a little insight as to disability insurance, life insurance, and all that fun. It's fun for me. A lot of people find it dry and technical, as you said, but I enjoy it.
Well, that probably speaks to why you're actually very good at it. You do enjoy it. It can be very technical. It can be very dry. And I think that's what's interesting about disability insurance as just a financial product that we've helped clients with over the decades. But let's just start there with choosing this as a career. Is this something, you went to Texas Tech? Remind me what your degree was in and how you ended up even in this field.
Sure. So Texas Tech has a phenomenal kind of personal financial planning program. I didn't do that.
Let's talk about all the other ones you didn't do.
Way to sell that. If you wanted to do that, you could. I chose not to. But
exactly, yeah, it's
there if you guys want it.
Yeah. So I actually got a marketing and management degree from the business school there at Texas Tech, and came out actually looking at a lot of different areas. I wasn't going to go into insurance or financial services. Was never the goal. Was never the dream. The first look I had at it was actually through my current partner and original employer, Andra Grava, who founded the DI Center back in 1996. And candidly, he offered me a position coming out of school where he would give me a chance to kind of help him rebrand his agency a little bit. And I thought it was going to be a 6-month gig. Thought it was going to be just, let me help with that. It's an opportunity to get my hands dirty into real marketing right out of school, which is not something you get to do a lot. If you're a marketing major, nobody really tells you when you start marketing path that means sales. Like I thought marketing, communication, these kind of things. No, that's not really what you're typically doing, especially coming out of school. And so interviewed a whole bunch of places, but he was the one place where I'd just get to dig right into real marketing right off the bat. Jumped at the opportunity. The initial time was really fantastic, but also wasn't necessarily lucrative. The opportunity was in the work, not so much anything else. But I kind of fell in love with the insurance and the financial services space. I love the kind of have that engineering brain. So I love the puzzle of it. I love putting it together. I love figuring out how does it go together? How do you figure out the plan? And so from there, I just kept kind of growing and expanding with the same agency I've been with ever since I came out of school. And so it was meant to be short term. I'm going to do this for a few months, get the experience, and go get my real job. And then this became a career that I wasn't expecting.
And that was 30 years ago.
uh,
Derek is much younger than that
14.
for those not watching. That's great, because then it ended up transpiring to where you literally become an expert in just some of the very, very nitty-gritty nuances of disability insurance. And again, I think that's part of why we wanted to have you on and unpack this, is because I think the perception of just disability insurance as a whole is that, okay, it is what it is. It's long-term disability, it's short-term disability, but it's the contracts, the nitty-gritty of not only understanding how they work, but the words that are in those that can make the difference in a claim situation of getting approved or getting declined or anything in between. And so that expertise and understanding exactly the various nuances, it never ceases to amaze me. We've been doing this for forever. And even as you mentioned, Andra, our business partner, Richard Cunningham, who retired but still works in it, he will still have questions. And that was one of the things that I thought was actually kind of relieving coming into this side. And Chris and I were advisors working through and with clients, and then coming onto this side, we're really sub-specializing in this area. There's a lot of questions. And then you go, okay, well, if Richard, who's one of the leaders in the industry, is still asking questions 25 years later, then there's a lot of things that can be learned here. I don't even really know where to start with that. I guess maybe we can start with just sort of the industry and market, and what kind of trends you think are happening within the disability insurance world.
Of course,
it can seem like it's dull or great, like nothing ever changes, but there's constant changes, right? That's why there's constant questions.
There are constant changes. You're right about that. It's in for the most part for consumers in a good way. The industry is growing and changing, and underwriting especially is ever evolving. So it was not that long ago that mental nervous issues, concerns, health history could maybe even cause a declined policy most of the time in the disability insurance world. And even on life insurance, there was some question marks. And it wasn't that many years ago. I mean, even a decade ago, mental nervous history was viewed completely differently than it is today. And I think that's a good thing.
Can you do me a favor? And I'm just going to break some of this down, and our producer, I'm going to call this out. Joe was saying before the show, look, you guys talk this technical talk a lot of the time. Sure. So let's try to break it down. So when we say mental nervous, can you talk about maybe even some of the specific things that might be uncovered that would fall underneath that?
Absolutely. So mental nervous history, what it is typically anxiety, depression, and a lot of different illnesses that might branch off of that. So one thing that's important to know is that the insurance companies don't make their own definition of mental nervous and what that entails. What they're looking at is exactly what a physician would look at. It is the psychological association and or kind of ICD codes. And they're looking at everything that is included in the mental nervous in those codes and in those diagnostics. So as an example, in a disability policy, something like Alzheimer's is not a mental nervous condition. Anxiety, depression, those are. Schizophrenia, that would be mental nervous. But early onset Alzheimer's, dementia, those are not mental nervous illnesses. So it's really important to note that the insurance companies don't get to make their own definition. They are, and actually, if you look in the policies, they will flat out say, oh, and we're using this manual, which is the current manual, to define this term, especially for mental nervous more than probably anything else.
So you're saying that a decade ago, they would get declined. They weren't looking at approving people. So what's evolved and changed to where now they will approve it? And then the second part to that really is, when you hear that they've moved to be more liberal with it and approving people, but now we're actually seeing an uptick in some issues and cases and SSRIs and depression, anxiety, especially within the physician field, and burnout. And that's what we talk to a lot of physicians about. So can you talk to why they move or have been moving in that direction, but then even with the uptick, what that might mean?
Absolutely. So the reason they're moving that direction is somewhat because society and medicine has moved in that direction as well, that these are not, we know more about mental nervous, and I'm not a physician by any means, but do work in, the health space every single day because of the medical records we're looking at. And all of the cases we look at and are trying to get through underwriting in the best way possible. So we get a long, hard look at a lot of what is going on. And we see the same thing with the SSRIs, and especially with young physicians and those coming out of training. I mean, I can't imagine what it takes to get through residency and or fellowship, but I can imagine what I would probably do to try and help myself to make it happen. And so how it has progressed is that we, as the insurance world, have looked at these conditions. We've looked at the history. We've looked at how it's being treated. And I think that stigma has been removed as well, even in the insurance space. Insurance moves slower than culture. So you have the world progressing and seeing these for what they are, which is a mental health disease that can be managed, can be monitored, can, really be, for all intents and purposes, unknown and not a big deal to the outside world. And you've now gotten the underwriting and everything to start to follow that and realize that, hey, we don't need to decline a policy because somebody has both anxiety and depression. We could simply exclude mental nervous disabilities on this policy, leave everything else as it is, and be totally comfortable with the risk. We don't need to just say no thank you to the person as a whole, which is what, again, not that long ago was happening, or maybe even the insurance company saying, well, we'll take the risk. We're not going to decline you, but we're going to limit how much risk we have. We're going to decrease the benefit period that we'll give you at the absolute most to a 5-year instead of your entire working career, which is the norm. And so those kind of things, it's been step by step. It's been little steps like, okay, we won't decline you, but we'll reduce the risk to, all right, maybe we're not going to reduce the risk as much, but we're going to add an extra premium. Okay, now we're not even worried about the extra premium. We just exclude it because it is a pre-existing history and we're good, and everything else can be just like it is for any other policy.
So Derek, you used the word exclusion there. I think a lot of our clients or a lot of listeners will hear exclusion. One, I want you to kind of color that line in, and if you can kind of compare it as well, along with maybe if there was a knee injury or a back injury or a shoulder injury, so that the mental, I don't want it to be tagged solely with mental nervous, but just from an exclusionary standpoint, what does that mean from an insurance carrier? Better yet, what does that mean if you're the person who's looking to get a disability coverage in this case? What would an exclusion mean to them?
Sure. So exclusions are much more common in disability insurance or disability income than they are in life insurance. You do see them on life insurance from time to time, but they're usually only when very unique circumstances, such as somebody is a private pilot and the insurance company is saying, hey, we're going to put an exclusion on you piloting for this
the hazardous activities, the scuba, the heli-skiing, the private pilot, those things, and those are literally listed out, right, on an insurance product, right, where they're having to check a box and say, yep, I do these activities. Disability is a little bit different, correct? Right, where some people go through an underwriting process. If it's an individual, sometimes they don't if they're going through a group. But an exclusion, if they're looking at that, and we hear a lot of people say, well, that happened 5 years ago. I mean, it really wasn't that big of a deal, right? It was that kind of thing. From a carrier to say, we want to cover you still. And rather than saying, hey, we'll cover you to 65, 67, 70, and go down into a 5-year or 10-year, or you're looking at 15,000, we'll cover you to 10, right? Those are contract things that it's easy to go through. An exclusion would be saying, we'll cover exclusionary of this particular pre-existing condition, right? Is that how you would explain it to somebody?
Exactly. So what I typically talk to people about when I talk about exclusions is that an exclusion is a way for the insurance company to say, we are happy to grant you coverage, we're happy to approve you for coverage, but this one issue or these one or two issues, which you have a pre-existing history for, are things that we are not going to cover amongst everything else. Now, usually what that means is, or what that causes, is it causes a client to go, well, wait a minute, I don't know if I want the policy if that can't be covered. And as opposed to the entire rest of the medical booklet that is now on the table and covered. So to your examples, we'll talk through a little bit of, how do you even get an exclusion? Why would an exclusion be necessary? And where does that come from? And you see it very often. Middle nervous and the back are the two most common exclusions in the industry. The back or the spine. So middle nervous, we talked about already. How you would typically see a middle nervous exclusion is if you are currently taking any kind of medication for anxiety, depression, ADD or ADHD. Now, I will say we talked about insurance companies getting a little better. We're starting to see some of the insurance companies have an exclusion specifically for ADD or ADHD, most often ADHD, and not excluding the entirety of the middle nervous. So they're a little slower, but they are getting there. They are coming along with society and realizing that, hey, this is a different animal. We really shouldn't be probably looking at the entirety of, you have no history of anxiety or depression, but because you needed a little bit of help to, get through residency or get through fellowship and studying or even medical school, we're only going to look at that ADD or ADHD history and only exclude that. Now, that's not across the board. There's 5 main insurance companies that operate in the white collar and the physician space and the disability insurance, and we'll get more to that later. But not all of them are doing that yet, but they're all talking about it. So it's being worked on. And the middle nervous and the spine, and the spine, the reason that one comes up so often is this is kind of a look behind the curtain when you get into the underwriting world, is that if you have seen a chiropractor, for example, in the last 2 years, you very often will end up with a spine exclusion. And usually what we always hear is, well, wait a minute, I was just going in for adjustments. Mm-hmm. So my first question when somebody says that is always, okay, well, did you bill insurance? And if they say, no, I paid cash, it was purely adjustments, I only went a few times, we'll probably fight that exclusion. In a lot of cases, we might win it and we might be able to get the exclusion removed. If, however, you say, oh yeah, we billed insurance, it was the best thing for me. I usually, don't have to tell physicians this, but every once in a while it comes up, is that if you build insurance, there is a diagnostic code. There is no diagnostic code for wellness or for adjustments. So the insurance company does not care who was maybe playing a little fast and loose with the rules or who was maybe putting that. It doesn't matter to them. At the end of the day, if insurance was a part of that chiropractic visit, then according to the medical records, there is something wrong with your back. Right, wrong, or otherwise, you may disagree with that. You and your chiropractor may have had, an understanding. If insurance was a part of it, there is a code, and the insurance company that's issuing that disability policy is not going to overlook that. Now, good news is when it's just chiropractic in the spine, which is so common, you can usually get the exclusion removed if you stop seeing a chiropractor for a period of 1 year or 2 years. So that's the other thing with exclusions, is understanding that some are permanent, some are not. Some could be looked at very quickly within 1 year or 2 and removed from the policy as if you never had it. So when you get an exclusion removed, if you had a disability claim 10 years later for a spine issue, when you had a spine exclusion previously but got it removed, that claim is perfectly valid, and it's as if the exclusion was not there. So again, as long as all of the answers all of the time were correct and accurate, and you were never, giving in incorrect information, of course.
I don't want to go down a wormhole on this one, but it's super easy for me to digress. And for the reason, I actually have ADHD, take a medication for it. So I'm sitting here and I'm wondering if the people that get that exclusion wonder the same thing. Like, what is it about that that's actually going to be a risk to a carrier, which is really more specifically, what's the risk of me having to go on claim? So if clients are on the other side going, okay, well, yeah, I needed that. I need this medication, but what is the actual risk to a carrier that they're not willing to cover it for that specifically?
Your question really points to why the insurance companies are looking at an exclusion for ADD and ADHD only, because I think at one time, maybe some years ago, there was concern about comorbidity. So comorbidity is a huge topic in the disability insurance space and even the life insurance space, long-term care, really any of those health products, because comorbidity is where you can have one health issue that because you have it, it can lead and cause other things to start to break down or start to have problems. And so mental nervous for a long time was viewed that way. Like, oh, if there's one thing going on from a mental nervous perspective, then there's this really high probability of comorbidity and something else going wrong. And again, so much of insurance medicine, which is very different from clinical medicine. Insurance medicine is a risk-based decision. Clinical medicine is the ability to actually be with a patient, be with a client, see how they're doing, have them come back. What do you always get told at the doctor when you leave? Hey, if anything changes, call me. Let me know what that happens. A disability insurance underwriter or a life insurance underwriter doesn't get the, hey, if anything changes, call me back. So there's this aspect to the underwriting side where if there is any concern over comorbidity at all, then that is why exclusions kind of come into play. And that's where these things come from. So ADHD specifically, I think you're starting to see the insurance companies realizing that it maybe isn't the same as anxiety, depression, or some of these other things in the mental health space. And that's why you're starting the exclusion language for just that. Now, the question of, well, how would I even become disabled for ADD or ADHD? Well, the insurance company is not saying that you will or you won't become disabled. They're simply saying because you already have the history, they're not going to take that extra little bit of risk, whatever it may be. And it may be minuscule, which I think we would all agree with ADD and ADHD. It is. There's very, very few claims or history around a claim in that world. Now, anxiety and depression claims, those are more significant for sure. Mm-hmm. And so I think that's why, as you see medicine advance, insurance is slower, it does lag, but it starts to see what medicine is doing and try to pivot, try to move, and try to react accordingly. But it's always going to be behind where the clinicians are.
Well, so, they're writing contracts that may be enforced for 20 or 30 years. So
right, that's what I was
insurance carrier is they're looking forward and saying, okay, based off the information we have, how do we hedge our bet as a company looking 3 decades down the road? Thus, what Paul said in the beginning and what you confirmed, things change all the time. These contracts are changing and updating. We were at a conference last year, I think, and the head underwriter for a particular carrier was talking about things such as this, talking about coming out of COVID, weight loss drugs. Like the underwriting departments at these companies are very dynamic. They're having to reevaluate all the time. And so I think that's why it's important to be able to work with someone who has deep knowledge around these. What is it, Paul, that Richard used to say all the time? What the big print give it, the small print take it away, right? Yep. You really understand, I've got income protection, I've got a disability policy. Not all of them are made the same. Not all of them are structured the same, and being able to understand that. So, but that's where I hold on to Paul, because I'm kind of sometimes we look at things and say, well, that doesn't make sense. But if we were looking at it and saying, okay, does it not make sense, but you're going to bet the next 20 or 30 years on it because someone's going to hold that policy, right? That risk will continue.
Well, the reality is if somebody's getting a policy, and it's like you said, the long-term nature of it, if they go on claim in the early part of their career, that could be 20, 25, 30 years of claim time. That ends up being millions of dollars. So now if you're looking at a friend who wants to borrow $10 versus a friend who wants to borrow $5 million, you're like, I'm going to have to ask you a few more questions,
How late were you on that car payment?
Right. Yeah, so what is this for again? How are you going to pay it back? But your point about it being long-term in nature, and I think people need to understand this, is one, the carriers scrutinize it more than we do because they're looking at that risk for the long-term nature because they have to get it right. And this is the other part that's good and bad. It's kind of a double-edged sword, but these policies will have a provision called non-cancelable guaranteed renewable. That's a protection for the individual, meaning they don't have to continue to re-underwrite every year. And sometimes we get that question, well, do I have to do this again next year? No, they're doing it this one time and then that's it. So they don't get another shot at you. right? And that's to your point, Derek, is, it's not just where the health issue is now, it's where is it going to potentially go. So they're looking at the combination of things there. And that's why getting it right the first time is so critical for them. Now, if it goes away, and I would substantiate and say, look, they will re-review it and remove the exclusion. So they're not so hard set on it going, well, we'll never do that. But I think we all have to be reminded of that. And to that, I would also say, because of those factors, be glad that you don't get stuck in, I think we get insulted because I've been through the process. I have my coverages. I don't like it any more than anybody else. I don't like being told, well, this is what's going on, this is going on. And I happen to have both the back issues and the mental nervous issues, right? So I'm like, great, thanks for outing me, Derek. But, but both of those exist. And you say, I don't like that. I want to perceive myself as being healthy. Well, that's not how a carrier does. It's not an insulting thing. So don't take this stuff personally. They're just sheerly looking at it as numbers. That's why actuaries have jobs. So again, try not to take it so personal. It is what it is, and just, work with it and move forward, I think.
Absolutely. And I think too, you mentioned a word there that is so important. And I think it's worth drilling into a little bit, because what we always hear, if you're in our world and you're asking these questions of people all day, every day about health history and do you take any medicine? The first thing that we always get told, no matter what, is, hey, do you have any health history? No, I'm healthy. Okay, quick time out, quick pause. Let's talk about, and again, you're talking to physicians, mortality versus morbidity. These are very different things. And so you could be 100% healthy. I've seen people who are marathon runners who are definitely in better shape than I am with my, 4-kid dad bod. And they've got 3 or 4 exclusions on their policy, because you kind of mentioned it earlier, Chris, of, they had an ACL that they had to get repaired last year, and they had, they've got a pin in their ankle. Usually what I tell people, if you have hardware anywhere, like you have been permanently altered medically, that is going to be excluded. The more you are the $1 million man, the more you're going to have exclusions. That is just the way of the underwriting and the way that the world works in there, because once you start putting foreign parts into your body, that is something an insurance company can't manage.
Right.
They're looking at that saying, well, we have no control over how that part works or anything else. So you're going to have an ankle exclusion, and you're going to have a knee exclusion, and you're going to have a back exclusion because you had a, lumbar surgery 2 years ago. And to that end, too, the other thing I'll say is timing and how recent, recency bias is incredibly important. There are certain risks that if we're 2, 3, 5 years out, it's not a risk anymore. Versus, I'll give you an example right now. We just got a policy through underwriting, disability insurance, one of the big 5 carriers. Client had LASIK in essence while they were doing the medical questions and going through the process, and they got an eye exclusion, and they're not real happy about it because they say, well, my eyes are perfectly fine. This was voluntary. Why am I getting an exclusion? Which the company has already said they will review on the first policy anniversary. Well, you're getting an exclusion because you're less than 30 days out from a surgery that probably will be fine, should be fine, but that is an unknown risk. And unknowns are always far, far more conservatively dealt with than knowns. Something like type 2 diabetes, where we know exactly what it is and you've had it for 5 years and you're treated, I can get you a policy for that. Versus you may have had a much more minor, less concerning issue pop up 30 days ago, and I can't get you coverage because it's just too soon and we haven't figured out how it's going to play itself out yet. And that goes back to that 20, 30, even at sometimes 40 years of risk that an insurance company is having to say yes to without any ability to get back out of. And that's why sometimes you get postponements even when somebody is, as we would say, healthy.
So we spent the first beginning talking about the underwriting process, right?
Yes.
But that's when someone's getting a policy, an initial policy. And so we think of it from that capacity. But one of the interesting things about income protection, disability income, policies, the stuff that we talk about, is that there's an internal mechanism for increasing that coverage over their career. And so while we are going through the underwriting process in the beginning, not all the time are you fully insuring yourself because your income is going to grow over time. You may or may not be working somewhere that has stuff. And so they have some built-in options there that are a little bit different with each carrier. Can you kind of go through that and then layer that back into, well, hey, what happens if something happens to my back? I've already got coverage. Am I able to increase it? Right. And they're called either benefit increase riders or future increase riders. Like they have different terminology in there. Do you mind kind of sharing that? Because this, I think, goes to the point of, hey, when you're healthy, when you're young and you have the ability to get a policy, it's a great time to go ahead and make sure you can get that, because we just spent 30 minutes talking about exclusions and what ifs and these things happen. Do you mind spending a couple minutes talking about the built-in ability to increase it over time?
Definitely. So as you said, each of the insurance companies has their own specifics to what they guaranteed insurability is kind of the catch-all term. But then there's different versions. Every company's got their different name. Benefit increase rider is a very popular term. Future increase option, future purchase option. We love our acronyms almost as much as the medical community does. Sure. So you start to get into BIR, FIO, FPO, GPIR. There's a lot of them. So point is, what that allows is it allows somebody to buy up with financial underwriting only, financial evidence only, and medically they are whatever they were when they first bought that policy. So if they did have, let's say we talked about, a spine exclusion, if they had a spine exclusion on the original policy and they have an opportunity to buy up, and depending upon the company, that may be every year they get an opportunity to buy more coverage as their income has grown. So you got to show that your income's gone up. So you got to
qualify. You got to qualify financially, right?
Yep. And usually there is a cap. So they're not just going to give you unlimited insurance to any amount you pick the monthly benefit. There's always going to cap it. Right now, you typically see either a $15,000 monthly benefit cap or a $30,000 monthly benefit cap. And it usually depends on how did you get the policy in the first place as to which one of those you get. Did you get to go through some guaranteed standard issue, GSI, again, these acronyms, some guaranteed kind of process, or did you go fully underwritten, answer all the health questions? That's going to also determine how much they're willing to give you without ever having to take medical questions on. But the reason that guaranteed insurability is so important, and you should lock in your health as soon as you can, what we see is most people in residency, before they're ever getting that, the fellowship or the attending job, it is trying to lock it in early on, because now they have the ability to cover 300,000+ of earnings, maybe more, probably more, without ever having to answer another health question. And so to your previous question of, well, what happens if you have a health issue after the original policy? Pat yourself on the back. You planned well, and that would be a fully covered claim, because you now get to increase. And when you do increase, you buy the exact same coverage in most instances that you originally had. Now, I say in most instances simply because there are a couple of the companies where they do not guarantee maybe the rate basis on that original contract. They guarantee the definitions, they guarantee the policy language, they guarantee that you're medically exactly what you were before, but maybe the rate basis is the current book they're using versus the book you originally bought when it comes to the actual rate. Whereas one or two of the carriers actually guarantee everything, and you are buying off of the exact rate book that you originally bought all those years ago, just at your current age.
Yeah. So again, the definitions matter, right?
Yeah.
And so
language is everything.
I was trying to walk a physician through it a couple weeks ago, and he was having a little difficulty understanding. Well, so if I can, let's just use round numbers. These weren't his numbers, but so I can get $5,000 a month coverage now, but I can go all the way up to 15 over time. I never have to do medical again. I just have to send in how much am I making, and then what am I getting through my group plan, and then you're going to tell me am I eligible to increase or not, right? So we kind of, and he's like, well, why don't insurance companies, like life insurance companies, do that? Because I'm probably going to need more life insurance once I get married and once I have kids. And he's like, I don't need any right now, right? And he was such a great question. I was like, great question. We'll go to the comment box and see if we get it. But your income, right? Your income gives you the ability to do it. So the underwriting, again, I just want to go back to if you're healthy enough to get it, that is the opportune time to get it. Waiting to get, fire insurance on your house after you smell smoke doesn't work, right? And so that's just the way that the insurance companies work. And so going back to the underwriting real quick, because you have access to a bunch of different carriers. You keep talking about the big five, as you call them, those things. How different does each carrier underwrite? Meaning, do you see some carriers approve someone with an exclusion, whereas someone else would be a decline, versus there's going to be other things? We think of it as like a conservative nature of underwriting versus a more liberal view on a particular topic, right? Life insurance years ago, when e-cigarettes were coming out and different things, we had some carriers that said, nope, that's going to be the same as smoking a cigarette. That's going to be the same as marijuana. That's right. And so it goes back to ADHD and AD, right? All those things. How do you view different carriers from an underwriting standpoint when you have a physician looking at, or anyone looking at disability, but primarily our listeners are physicians, looking at different carriers and underwriting questions?
Yeah. So again, mentioning the big five there, because there's fewer carriers, I don't think you see as much discrepancy as you do in the life insurance world. So with life insurance, there are dozens and dozens, arguably well over 100 carriers in the true brokerage space. You're talking about dozens, not hundreds, but still, you can get a lot of variation on, what somebody might be willing to get very best class versus, one or two classes down in the life insurance world.
Yep.
Disability insurance, because there's really 5 carriers primarily playing in that white collar, that physician, that dentist market space, you do get a little bit less. But to your point, absolutely, we do see variations at times, and it somewhat depends on what is the occupation, and we'll get to why that matters here in a sec. And then what is the actual condition? And right, wrong, or otherwise, the truth of the matter is underwriters are people too. So the more they see something, the more they become comfortable with a particular type of history, typically the more aggressive they will be willing to be, or to use that other word, the more liberal they are with that condition. And so what you often see is that you will see a carrier that is starting to maybe lead the charge on a particular area or condition. So again, we talk about mental nervous being so common. Usually what you'll see one insurance company who is starting to get out a little bit in front of the others as to how liberal they're willing to be, what kind of offers they're willing to make. They're not going to put an extra premium on it. They're not going to reduce. And the market responds pretty quickly because there's only 5. So if you don't respond quickly, you get left in the dust and you start to lose out on cases. And then that reputation moves really, really quickly in our world. And so if you start to become one of the carriers that's known for being conservative in your underwriting, you won't even get a shot at a lot of these individuals that may have some sort of health history. I will say the best thing anybody can do, though, because it's such a small number, is you can shop each of the carriers informally, is the word we use, where if a negative or adverse decision were to come down, it's not something that's an official decision. You haven't put an application in, and it's not something that's going to get put on the record, which it would be, and we'll talk about it here a little bit later, but MIB is the Medical Information Bureau, which a lot of people don't realize. When you actually apply for insurance, if there is some kind of negative decision, that gets put in a database that all the other insurers can then search for whenever you apply for insurance in the future. So that record very much stays with you, just like a health record would. It's not going anywhere. And so what I always tell people is, if you have any kind of, ongoing, especially chronic conditions, don't just put in 1 or 2 or 3 applications with the company and say, well, let's see what happens. Take an opportunity to communicate with somebody like y'all, or like somebody in our world, an advisor, an agent who can, shop is the word we use, the insurance companies, to find out which one of them is going to be maybe the most willing. And what you're going to find is most of the time, they're all going to be very similar. They're all going to say, oh, we'll exclude that and or we'll put this extra premium. But absolutely every once in a while, for whatever reason, I'll get one carrier that's kind of, we call it out in left field. And the thing I tell everybody is, hey, look, take it. they're willing to do something nobody else is willing to do. They see something in your medical records that tells them, or in your health history that tells them that they're not as worried as everybody else is. Jump on that, take the offer, and let's move on to the next.
We've already demonstrated that underwriting is such a huge part of getting the policy and is part of DI. So to shift a little bit here, what trends are you seeing that carriers might be moving towards or away from, towards either simplified underwriting or accelerated, making it easier? How is AI and that rise? We've talked about that technology. How is that impacting how carriers can review, look at these things, operate more efficiently? Because that's part of it too, right? There's the mortality experience, morbidity experience that carriers are looking at, but they're also looking at the expense of actually issuing the policy, having the policies there. It does cost them sometimes several $100s to get medical records and go through the process. Now, people don't have to pay that when they're applying, but the carriers do. That's all part of the business. So what are you seeing in that direction that might be making it easier for people to get coverage, or making it less by having technology or online medical records, things like that?
Yeah, so I'll start with, on that part, a little bit of background as to just what goes into kind of underwriting and all the background checks, for lack of a better word, that are happening whenever you're submitting an insurance application. Because I think that's one thing people don't understand, is what all is actually being looked at. So I mentioned before, MIB, Medical Information Bureau, which is an ability to see where have you applied before, what was the decision, was there an adverse decision, and getting that in real time, as soon as somebody submits the application. Because when you, as an applicant, sign that HIPAA authorization, you're giving them the ability to do so. That's what's in that language. You talked before about big print, small print. And so Script Check is another tool, which is a prescription database, which pretty much every pharmacy at this point is a part of. Walgreens, CVS, all the grocery stores. I mean, unless it's a true one-off mom and pop, no parent company, any prescription you've ever filled, you may or may not have actually taken the pill. If you filled the prescription in your name, there is history of that, and that is going to show up, and the insurance companies are going to know that. On top of that, there's also, now, you talked about technology and records, medical claims data that's available at the just push of a button. They don't have to go request your medical records in a lot of cases. They're just getting medical claims data immediately that's telling them that you were in the doctor and these, CPT codes and were being utilized for you. And what we're seeing actually now more today is, because of this technology, we're having to help clients actually fight what's in their medical records a little bit more and in their medical history than we ever did before, because it's now easier to get information on individuals, but it's also easier for information to be wrong. And so we're seeing that more and more, where I've had 2 this week of somebody saying, that's simply not true. What do I do about this? I said, well, we can't do anything about it with the insurance company. They can only look at what they're getting from elsewhere. You have to go back to Dr. So-and-so. You have to go to provider so-and-so, and you need to find out from them why that's in there and how to get it removed. And then we kind of go back to the insurance company after that, show what's happened. But that's just another piece of the process that's out there, that's running in the background. And then you actually do get full-blown medical records at times, and their EHRs are becoming more and more popular. I will tell you, insurance companies are not using EHRs as much yet, just because what we found is it's really regional how good those are and how accurate they're coming through from the vendors. A place like New York is fantastic. You can get almost all medical records via EHRs in New York without any real concern over the validity of the data. A lot of other places is not so. You're still literally waiting for the complete PDF package to be coming through, electronically sent. It's not just this automated type service in a day or two. And so the reason I background that a little bit is I think it's important for people to understand what all goes into these things when you start to get things like accelerated underwriting, which is otherwise known as fluidless underwriting, AKA I don't have to do an exam. I don't have to give blood. I don't have to give urine. Nobody's, taking any fluids. Yay team. There is a trade-off for that. Well, yes, it is fluidless and it is accelerated, but they are running all these background checks. That's what made them comfortable with giving up the blood and the urine in the first place, was that they had started being able to run these tests. So you see life insurance move a little faster than disability insurance in this world. Life insurance has been doing this since well before COVID, but COVID really fast tracked these things, right? Because no insurance company during COVID wanted to say, hey, go get your blood drawn. And everybody's going, I don't really want to do that.
Let a stranger into your house. Yeah, just let a stranger in your house. Stay 6 feet apart, draw blood. Yeah.
Right.
Yeah.
Or go into a clinic and hope that everybody's okay. So it's COVID really fast tracked these things in a positive kind of way for the industry and for clients and for applicants. Yet understanding that there's always a trade-off. When you actually do the blood and the urine, what we found is you're more likely to get a offer where an underwriter is maybe giving you a little bit of grace. They're giving you a little bit of leniency because they have the blood and the urine that makes them feel comfortable to do that. So you're seeing more and more now available. So in the disability insurance space, it's very normal now to get $10,000 in monthly benefit, which typically covers about a $200,000 annual income if there's no group insurance or anything like that, without any kind of blood or urine. And again, there's really no issues with that. You're running the background checks, but when you want to go for higher amounts, you often do have to do the exam. And while people usually don't enjoy the exam, I do try to often let them know, hey, an exam's not actually a bad thing. Because if there does end up being any kind of problem in your medical records or anything else, the more data we have, the better and easier it is for us to fight to try to not have exclusions, to not have extra premium, to get the full benefit period. Because like I said earlier, unknowns are far, far worse than maybe not the best known, but we know exactly what it is. We know exactly how to handle it. It's when you have the question marks, that's actually really what typically gets you the most conservative offers.
It's kind of like showing your work on old exams, right? You can, if you just put an answer down there, the teacher has no idea, right? But if you show the work and work it out, maybe you did the math wrong on the last one, but they can see where everything else was correct. You're getting more credit for that. And that underwriting gives those underwriters. I try and tell people all the time, they don't know you. Like, you're taking it personal. Like, there's someone who's sitting in a cubicle probably somewhere who's looking at they're just looking at data or AI, as Paul talked about. So it's not, well, I just don't like Dr. Smith. He's not getting DI for me because I'm in a bad mood today. That's not how it works. But sometimes it feels that way, right? When we don't get the result we want. And so the underwriting sometimes, while none of us really like that, it does give, it paints a more full picture and allows people to go. And those higher limits you're talking about, like you were using numbers before, 25, 30, or sometimes larger monthly benefits if we can get up there. So,
yeah. And the other thing I'll say to that is acknowledging underwriting is invasive. It's kind of a, it's going to look at your medical history. It's going to look at your financial history. It's going to look at, did you get treated for this? Did you go do the follow-up? Did you go to the referral? Did you do these, items that you were supposed to do? And I think right off the bat, just taking in the fact that, hey, this is going to be a little bit uncomfortable if you have any medical history. Now, if you literally have none, there is nothing, then you get through the process squeaky clean, super quickly, and you get a perfectly normal policy and there's no problems. But
uncomfortable, you mean they're just going to ask more questions? They don't make you feel
right. Uncomfortable as in, you're going to have to go into some detail because
there's not a push-up test or anything.
Yeah.
Right?
No, you're not, there's not a physical.
The new presidential fitness test comes in.
No. So it's uncomfortable in that you are going to have to disclose. And what I tell every single applicant is, you don't necessarily have to tell your agent much or your advisor much of anything. The process is going to flow whether you do or you don't, and the information is going to come out. But the more candor there is from the beginning, the more transparency from day one, again, underwriters are people too, the better offer you're going to get. I can't tell you how many times we've been able to finalize and get an offer on the table that was borderline whether they probably should have got it, but it was because we started with the full picture from the beginning and said, hey, this is what they're going through. This is what they've done. This is how they're treating it.
Yeah.
And it allows the underwriter to say, okay, I can see the path here. You're not making me try to put this together and answer a bunch of questions I don't know the answer to. So I'm willing to go out on a limb with you here and maybe make a little bit better offer than if you made me find the information myself. And it may seem like, well, the information's the same. Why does it matter how they came to it? But it absolutely does. Because when they have to dig for it, the thought in the back of their mind is, what else don't I know? What else is there that you haven't told me?
Well, that's the other thing I was going to bring up is that carriers in general like a complete story. And I relate this to say, if you go to the movie theater, excited about the show, halfway through it, they just bring up the lights and they're like, okay, that's over. You're going to give that movie a really bad review or just walk out. Well, it's very similar. If you had something in your health history that otherwise resolved, and yes, let's say that you're perfectly fine now, but there's no follow-up from that. There's no closure on it. Then the story isn't over. It didn't end. It's left hanging, and a carrier has a harder time making a decision, in which case you're going to find a postpone or a decline or something like that. So having the full picture, yes, if it's resolved, you did the testing or didn't do the testing because it resolved, that's fine. But you got to circle back around and have closure on that particular issue, and generally, preferably before you try to do the underwriting. So, we've got this underwriting. Sounds like a nightmare because we've been talking about it for almost 3 days. But in all seriousness, what are the alternatives, Derek?
What do you mean?
To doing underwriting? You've got group coverage, right? That doesn't require it if you're signing up with an employer. And then you mentioned earlier GSI, right? So those are the only two things that can bypass underwriting. Can you talk to those a little bit?
Yes. So this is where it is so important to actually understand what's available to you, especially as a physician, and even more so if you are in training, if you're a resident, if you're a fellow, there is a good chance that you have access to something where you don't have to necessarily go through the full underwriting process. So you talked about group. We'll hit on group first. Most employers, especially in the medical space, if you are a W-2 employee, so again, are you a contractor or are you a W-2 employee? Because there's a difference in whether or not benefits are eligible or available. But if you are a W-2 employee, then you probably have at least the ability to buy group long-term disability or group short-term disability. We call it group LTD and group STD. So those are insurance policies that are actually owned by the employer, and you are covered under the plan by the employer. The reason that's important, that difference of who really owns it, is it means you honestly have no control in that plan. So group is usually very inexpensive, dollar for dollar, for the coverage. The reason being is that you are covering a large number of people with the same kind of definitions, the same kind of policy, the same kind of structure. It's usually a percentage of your income up to a certain cap, 60% to say a $5,000 a month cap, or a $10,000 or a $15,000 a month cap is common. And so, but when you leave, that employer is gone. You don't really typically get to take it with you. You don't get to decide the definitions of the policy. Language matters. We talked about that earlier. You are simply covered. Now, you get it for pennies on the dollar if you're even paying for it, or in a lot of cases, your employer just provides it. It's just there. They pay for it. And the coverage is a good baseline, but it's rarely enough. So what is important for individuals to know is that in a lot of these residency and fellowship programs, there's what's called guaranteed standard issue offerings, GSI. I think I looked it up in the last couple of weeks. Right now, there are over 200 guaranteed standard issue offers in the GME space. So while there are obviously way more GME programs than that, it's a pretty healthy percentage of the residency programs and the fellowship programs that have access. The problem is not everybody necessarily markets that program well or talks about it. So a lot of people don't even know they could have had access to guaranteed standard issue. So what does that mean? That means you get to fill out a very shortened application that does not actually have the full health questions. What it has is what we would call knockout questions. It's got a few questions on it, could be as little as 1 or 2, could be as many as like 6, where the questions say, you know, have you been actively at work? That's one of the big ones that everybody asks, you know, because they're just trying to figure out, hey, if you've missed work in the last 90 days, 180 days, whatever it is.
Not currently disabled.
Yeah, not due to, and it is also, are you actively at work due to illness or injury? So again, if you just took a little time off because you took a vacation, nobody's asking about that. They're asking about, have you missed time due to illness or injury? Also, there's usually questions around, have you had any kind of permanent loss of, you know, ability to hear or ability to see, you know, things like that. Again, you already have a condition that can sometimes knock you out.
I think those are 2 things that every married man claims, by the way.
Right.
I lost my ability to hear and see. I don't know what's happening.
I don't know what's happening. And so those, if you have the ability to tap into a guaranteed standard issue offer, which again, ask anybody that is in kind of the disability insurance brokerage space, and they should be able to get that list for you very quickly. I would tell you, if you're working with an advisor or an agent who is saying, oh, no, nobody does that, there's nothing available, that's kind of the first question mark of, are you getting the full story or not? Because there are a ton of them out there and they're pretty much public lists. So there's 3 of those big 5 we talked about earlier, carriers that are primarily in that space. And those 3 really operate the bulk of those 200 that are out there, 200 plus that are out there. And so if you have any kind of health history, I would definitely recommend at minimum look into it and shop it versus what you could get out there going through full underwriting, because the rates are typically very close. It used to be that maybe the rates were a little bit different, but again, kind of the evolving of the industry, those rates are all pretty close now, whether you get it through full underwriting or through a guaranteed standard issue offer. Product design is going to be pretty close. You do lose a little bit of flexibility in terms of your ability to choose certain benefits or certain riders on the guaranteed standard issue. But as I said, if there's any health history, if you've had any kind of surgeries, if you're taking any kind of medications, if you've had recent procedures, and I'll even give you a totally different example. We've got one going through right now. It was a sad scenario where this woman who's just finished fellowship, going into practice, going to be making good money. She has a note in her medical record she had no idea about. So she had access to a guaranteed standard issue offer, but she chose not to apply for it, didn't want to go down that road because she wanted to be able to pick and choose her policy a little bit more. Said she had no health concerns other than there was some postpartum, which, you know, was in the past, and we knew we might have an exclusion of some kind for that, but she wasn't worried about it. Well, buried in our medical records from about 2 years ago was chronic fatigue, which is an immediate red flag. Stop everything. Why was that there? That is a very concerning, you know, code or diagnosis in any kind of medical records. And now she can't go back to the guaranteed standard issue. So she's now stuck. She's just got to find whatever comes through this next channel, and what we do the best we can for her. But she had a great opportunity and offer sitting on the table for her, but she didn't even know what was in those medical records. So I usually tell people, if you have an access to that, you can go through underwriting, but it's kind of shocking how often something comes up that somebody may not even really realize was in the records or they thought about it. It happens all the time. I mean, weekly, I'm having to give somebody bad news. That's why we try to go out our way so much on the front end to say, hey, you have opportunity to do this. You should probably do it. You can always apply for underwriting after the fact to replace the other policy if you really wanted to go down that road. But you can't put the genie back in the bottle.
Yeah, that's the hard part about it. And I think that you uncovered something that's just very, very true, you know, especially with the physician population. Yes, they're brilliant, but they don't know exactly what's in their records in most cases either, right? They're having somebody else fill those things out, put in that situation, or they just forgot, and so a lot of times when those records are done, there's a lot of stuff that's CYA, right? They have to document it differently. You write something differently than what's actually maybe being explained. But the good news in all that is that it is still a personal policy. So we say GSI, but I just want to make sure that everybody's clear. That's an individual policy. So you're really getting the best of both worlds. You still get the ability to take it with you wherever you want to go. You have the contract language you want, and now you're able to bypass that. So as Derek mentioned, it's critical to make sure that you know whether or not that's even something that's accessible. Again, it's not everywhere, but it has grown, right, Derek? And why is that possible? We talked about the scrutiny of underwriting. How is it that, okay, well, now carriers can just determine that we're not going to look at any medical underwriting?
So guaranteed standard issue has really blown up in the last decade in the in the GME space, in the residencies and the fellowships, because what the insurance companies realized is, hey, we would really like to get young, healthy doctors that are going to be paying premiums for 30 years versus maybe a physician who already has one or two health things going on and only is already 50 and is only 15 years out from retirement, if that much, right? Maybe they're financially independent and they're going to be retiring in 5 to 10 years. And so the insurance companies are willing to take on that extra risk of not being able to ask the health questions because the population is younger and because it is a population that is going to be making good money. They are going to be high income earners. Most of them, again, they're playing the actuarial science game. Most of those people are going to be type A. They're going to be overachievers. They're going to be people that the idea of not being able to work because they're too sick or hurt to do so just turns them off. They're going to do, I have seen physicians do unbelievable, inadvisable things to try to keep practicing because they didn't want to become disabled when it was clear they just needed to start the claims process and probably accept that they were never going to quite be the practitioner that they had been. And that's, I again cannot imagine.
They worked too hard.
Yeah, cannot imagine what they would have to mentally go through to accept that. Mm-hmm. And accept that reality. I mean, right now, today, if something like that happened to me, I didn't go through residency. I didn't go through those things. It would still be borderline impossible to just immediately wrap my head around that. You've worked for decades to get to this place, and then all of a sudden, everything can change. Or over a period of months or years, things could suddenly change. It's an aspect that the insurance companies are willing to put out this offer because they're playing the numbers game. If they put it out to an entire program and they can get a really good acceptance rate and buy-in rate from the individual residents and fellows, then it allows them to spread the risk. It's all about risk. Can we spread that risk out? Can we take in enough premium to know that we're going to have a higher claims ratio? We're going to have more claims because we're asking less questions on the front end, but are we getting enough people to buy in that we can spread it out and it's acceptable? I mean, that's really the original premise from insurance all those hundreds of years ago, was spreading out the risk. At the end of the day, technically all crowdfunding is unregistered, unincorporated insurance. I mean, that's what you're doing. You're pooling resources to then pay for the individuals that actually need it. And so that's where that ability to do that comes from. But that also means these programs have to be successful, because if you don't have an advisor working them, if you don't have somebody trying to talk about them, they do end up getting shut down. And we've seen that here recently. So there was a trend of the industry really blowing up, and you saw several insurance companies, offer dozens and dozens and dozens of these GME, GSI offerings to campuses all over the country. And then a few of them have started to pull back a little bit because they maybe got a little bit too aggressive, and they had some that they weren't getting very many lives out of, which made them think, hey, adverse selection, we're probably only getting people who have some sort of health problem here. We're not getting enough people to be able to keep offering this. It doesn't change the people who got it. Good for you. You got it. You're covered. You have an individual policy that otherwise probably wouldn't have been available. Awesome. Good for you. Don't let that ever go. But it ruins the opportunity for those people at that campus going forward because there just wasn't enough buy-in to keep that viable for the insurance company.
Yeah. So we spent a lot of time talking about the front end, the underwriting. Then there's the policy design and the flexibility there, which we could spend, hours talking about just that. But let's talk about the back end, because you mentioned that that word claim several times there. So let's talk about claims and what are the most common causes that we're seeing, and have they shifted over the time? Are they new, the same? And in addition to that, if you could just give the listeners, from your perspective, what best practices maybe they can follow to ensure that they receive, timely benefit, fair payment, just making sure that claim process, because really at the end of the day, that's what this is really all about, is that they can get the payment they were hoping to receive if this should ever happen, right? So what best practices could they have to ensure that happens?
Yes. So in terms of the claims process, I think number one is starting the process as soon as possible. As soon as you think this is a health condition that could cause you to be unable, too sick or hurt to work. I keep using that language, for an extended period of time. So I'll give you some examples here in a little bit as to why that's important, because where we've seen scenarios where people unknowingly kind of shot themselves in the foot, not actually, figuratively, and how that played out. And so in the claims world, what's so important about starting the process early is that, in my experience, again, we kind of keep talking about the big five, they pay claims differently than a group LTD, group SCDA, group disability policy would. So I think that's one thing that's important to start with too, is individual disability insurance claims are different than group disability claims. So group disability is kind of going to be somewhat driven by more your current employer, and are you able to work there, and what are you doing, and when do you go on? And that tends to be more of a total or not always, but it's very commonly, are you working or are you not working? It is a yes or no, all or nothing. In the individual disability insurance space, you get a lot more what we call partial or residual claims, where you're unable to work as much as you were before. Again, in the physician space, you may be working 50, 60, 70 hours a week. And now all of a sudden something's happened and you can only push it for 30 to 40 hours a week. And you're going, well, I'm still working, so I'm not disabled. You might be residually or partially disabled. And the moment that illness or accident causes you to start having to lose time, to lose duties. So when you start talking about the surgical specialties, we had one claim here in the last year or two where it was an ophthalmologist that was an industry world leader in this one specific procedure. Virtually all the person did. They did a few other things, but all the money in the practice was driven by this one procedure. And there started to become a question mark of whether or not, due to like hands and some issue there, whether or not this procedure can continue to be done at that high level. Ended up not becoming a claim, at least not right now. But because we started the process early, we now have it documented as to kind of what's already started to happen, and the fact that this is probably going to be a disability claim. And it's not going to be because this individual couldn't operate on a person's eye anymore. It's because they couldn't do this one procedure that's driving 90% of his income. 90% of the practice's revenue is coming from this one procedure. So the inability to do that is everything. But if he had stopped and said, well, I can shift my practice, I could go do this, I could do that instead, you still can, but don't do that without starting the disability process. Because as an example, this was not one of our clients. It was somebody who came to us because they had lost touch with their agent. They were just looking for help a few years back. And it was a sad situation of an OB-GYN up in the New York area who, over a period of years, completely shifted her job. She had gotten to a point where, hey, I can't do the overnights. I can't do the schedule. I can't do as many deliveries. I need to modify my schedule. And she kind of pulled back on the deliveries, because that's mainly what she was doing was the OB work, and started pulling back on the deliveries, and then got to a point of, I don't think I can do deliveries at all. And so she's just doing gynecological work and just doing office visits and just no deliveries anymore. And then got to a point where she felt like, again, all due to this illness and this underlying condition that was degenerative and kept getting worse, got to the point where, well, I don't even think I can really see patients anymore. But she had already started working with a local program to be a professor and to kind of be in that GME space, and continued to do that to the point where now when she finally came to us, she was like, hey, I don't think I can work at all anymore. And we said, okay, we'll do what we can. You're not our client, but we'll do what we can to help you and kind of guide you and just give you some advice. But you also need to understand, you're no longer an OB-GYN. You're a college professor. You changed your occupation. So the question is now is not, can you be an OB-GYN anymore? The question is, can you teach in a classroom? Can you educate? And if that's the answer now we have to determine, versus had she started the claims process years before, when she started to lose the ability to do deliveries, she would have been on a total disability claim for who knows how long, and would have already been collecting total disability. But she was looking at it as, am I able to work or not? And in the individual disability world, that's not the right question. The right question is, do you have an illness or injury that is causing you to modify what has been your occupation? That's what you need to be thinking about when you ask about whether or not I need to file or start the claims process. And it is always better. I know we have some people who say, well, I don't want to start it. And then they get this data on me and they find out information that they don't really need to. And it's like, no, wait, again, pause, time out. It's actually always better for you as the client, as the applicant, for the insurance company to know where you are today before things maybe start to change or to shift. This is not about, oh, are they going to find out some sort of information about me? They're going to find out that my health has changed and I'm not as healthy as when I bought. Okay, that's part of the claims process. Who cares? That's what we need them to know. We need to know as definitively as possible where you are right now, so we can make sure that that's how you're being judged. Because when you start to make little gives, I got another guy right now, didn't want to tell his employer what was going on. So he never filed a claim because he thought somehow his employer would find out. No, this is an individual policy. He had been shifting things, had to take on less. His income has dropped in the last year, but now we can't even really use that because he didn't start the process soon enough. So now we're going off of a lesser income scenario if there is a residual or a partial disability, because he was afraid that somehow this would get back to his employer, or his employment would be in jeopardy if they found out that there was this underlying health issue going on, which I understand completely where he's coming from. But the disability insurance side, that shouldn't be your concern. You should be worried about, are you getting the benefits that you deserve?
Sure. Yeah. Well, that's, it's so impactful for people to think through. I can see it from both sides, right? From the individual who's sitting there saying, man, if I share this information, there's going to be negative ramifications. Right. And then from the insurance side, it's like, if you had told us earlier, we could have stepped in and done that. And it's so important. This goes back, having a relationship with someone. I understand that some of the stories you shared with us, they lost touch with their advisor, or their advisor lost touch with them, whatever. What those scenarios are so important to be able to stay connected. Derek, thanks so much for your time. This has been very impactful. On our podcast, The Patient Physician, one of the questions that we ask all of our guests is, when you hear that, what does that mean to you?
That's a great question. So first of all, I love the title. I think it's got layers to it. It's like an onion. You got to peel it back, because I think there's so
like
many.
Shrek. Our title's
exactly.
Like Shrek. You just got to peel
exactly.
The onion.
Yeah. You mean it stinks? That's what it. No.
Right.
So love the title. To me, maybe it's not the politically correct way to go about it, but I think what it makes me think of is that physicians are typically the worst patients. That's at least what I see when I get to see the medical records after the fact, and get to see kind of the process of that physician, because they have their training, because they know so much more than me, and the average person. They do not do those follow-ups we talked about earlier. They don't go back and see referrals because they go, oh, no, I'm fine. I know what it is. I know what it's going to be. I don't need that. And so from an insurance medicine standpoint, again, not clinical medicine, there is a difference. From an insurance medicine standpoint, they are the worst patients because they sometimes self-prescribe, or they sometimes get a buddy to prescribe it, or they sometimes, don't have to go through the same process that I would, where it would be documented to the nth degree, and they don't have to jump through those hoops. And I'm not saying there's anything wrong with that. I'm simply saying that makes it very hard to then help them in this world, because documentation is everything, and it's all about being able to prove it. So it's funny. I look at that title and I think about the fact that, I think it's very poignant, because it's a skill or a path that physicians aren't as comfortable being on.
Sure. Yeah. On the other side. Well, Derek True, thank you so much for being on the podcast. We've really enjoyed your knowledge, your skill, sharing the stories, making it applicable to the listeners as we go through it, and your leadership in the industry. It's very important that somebody's out there as a voice to continue to make sure that we're representing everybody well. So thank you so much for being on, and we will see you soon.
Thank y'all. Appreciate it.